Hey, this is Seth, and in this video, I'm going to explain how you can get a $107,000 deduction on your taxes if you're a digital nomad. Now, how awesome would that be if you could reduce your taxable income by over $100,000? It's totally possible, it's totally legal, and I'm going to explain how this is possible in a moment. But first, I do have to say, I am not a tax professional, I am not a lawyer. Please consult your own accountant before implementing anything I'm talking about here. This is not tax advice, this is not legal advice, and this video is for US citizens. I'm only talking about a specific credit in the US tax code. Now, if you're a digital nomad, meaning you are working from your laptop and traveling freely around the country or around the world, you still have to pay taxes. Everybody has to pay taxes. If you're a US citizen, especially, you need to know the IRS is very serious about this, so you're going to need to keep paying your taxes even if you're living in another country. However, they have made it so it could be much easier for you to pay those taxes, and that is through something called the Foreign Earned Income Exclusion. Essentially, if you are out of the US for a certain amount of time, which I'm going to talk about in a moment, you qualify to have your earned income or your taxable income reduced by $107,000. And that means that realistically, you might end up paying zero income tax as a digital nomad, which is pretty exciting. Once you start earning money in the real world as an adult, and they never talk to you about this in school, you will see that taxes stink for everybody. Like, you think you're making this much, and I told you when I lived in California and I was making six figures, I was getting dinged for the federal income tax plus California state income tax, and it was not fun to make money, work very hard, and have the government just take it for taxes. So you can reduce that pain through this foreign earned income exclusion. So how could you end up paying virtually zero income tax through this credit? Here's how it works. Let's say you're making $65,000, $70,000, $75,000 in your salaried remote job, like Keyshawn. He's my student. He's 20 years old. He's a paid media buyer. He makes $75,000 a year. This is his pay stub. This is an actual copy of his pay stub. Now, this is what he makes weekly or bi-weekly, and these are all the taxes. And you can see every couple of weeks he pays $340 in federal income tax, which adds up to almost $9,000 per year. Now, if he was living overseas and qualified for this credit, that $107,000 deduction would reduce his earned income to zero, and he would not have to pay that $9,000 or so in federal income tax. That would go right into his pocket, and that would be awesome. So, I know everybody would like to qualify for this. Of course, you do have to do a few things. And the number one thing is, guys, to qualify for this is that you do have to be outside of the United States for at least 330 days out of any 12-month period. So that means is if you get to another country in January or even in May, you have to stay there from May to May, and you can be back in the US for 30 days of that time period, which is also something to consider if you do want to pay a visit back home and you want to take advantage of this credit. You really can't stay for more than a couple of weeks. But that is like the main, they call it the physical presence test. Now, you really do need to talk to your accountant to get all the specific details, but that is the main thing, is the physical presence out of the United States. The second thing you need to know about with this credit is that it only applies to salaries. W-2 salaries from a job paid through like a payroll company like ADP, an actual job. If you are a freelancer, if you run your own business and you're getting payments from customers through credit card processors or through invoices, that income unfortunately does not qualify. It's called variable income. It's not earned income in the eyes of the IRS, which is very unfortunate. I wish that it wasn't like that. However, there is a way for you to qualify for the credit, and again, you do want to talk to your accountant about this, but basically something you can do when you start receiving income is you can set up an entity or a company, an LLC, and you can actually have all your payments go to that company and then have that company pay you a salary. Again, I am not an accountant. I know I'm saying that again and again because I want to be really clear about that, but you should bring up this concept to your accountant and they should know what you're talking about, because then again, if you get paid a salary from your own company, that's still a salary, and that could potentially qualify to be deducted through this credit. I know I'm just mentioning this because I know it's a very big issue. You know, if you have a remote job like Keyshawn, you don't have to worry about it. But if you're dealing with your own clients, if you're freelancing, then not only do you have to pay, you still have to pay your self-employment tax to the government. You do want to understand how it could be possible for you to qualify for this credit. I think they should just, allow that the credit to be applied for freelancers, but you may have to do a little bit of maneuvering. Now, if you're a digital nomad and living in another country, the chances are you probably have gone, if you're in a Western, from a Western country like the United States or Europe, a lot of us like to come to places like Southeast Asia. I live in Thailand. I have a friend in the Philippines, and we love it here not only because we love the culture and the food and the people and the nature and all that stuff, but it's also a much lower cost of living. And one of the great things about living overseas with a lower cost of living, and then if you add in this foreign earned income exclusion, it can really reduce your expenses and leave you with more capital in your pocket to do what you want to do with your life, or to invest, or to save, or whatever it is you want to do with it, which I think is another very powerful and appealing aspect of being a digital nomad. I definitely recommend seeking out, again, a tax professional to just help you feel secure and understand that you've qualified for this the right way. You've done everything by the rules that the IRS has in place. And honestly, guys, I've always liked having an accountant. I've had an accountant for the last 11 years, even when I wasn't making that much money, just because I liked having a professional who understands taxes. Doing taxes for me used to be so stressful, but it's so much better when you have somebody watching your back and making sure that everything is done properly. And especially when you're doing this credit, you just want to be extra sure that you have qualified for it, because it is just such a great credit to qualify for and can put a lot of money back in your pocket and be a really great benefit. So anyway, guys, I hope you enjoyed the video. If you have any questions or comments, please leave them below, and I will see you in the next video.